Before we begin with today's market analysis, I would like to mention our new channel membership options. This is a special introductory offer which will open access to members-only trading strategy videos that are based on high-value, high-conviction investment strategies and are characterized by superior risk-to-reward metrics that target massive, market-beating returns over time. Please note, this is a limited time offering of just $9.99 per month, but members that sign up during this introductory period will be able to lock in this new low rate for the entire duration of the membership. Again, this early sign-up period will allow you to lock in this low introductory membership rate for life, and these new low introductory rates will only be made available for a limited time. Monthly membership prices will be going up after this short introductory period ends. With these comprehensive, members-only trading strategies, I only choose high-quality, high-conviction stocks that are easily accessible, with relatively low share price values that are designed for easy trade positioning, and combined long-term trading gains are expected to far outperform the monthly membership rate of just $9.99 per month. Join now to lock in your low introductory rate and start trading stocks with the pros. Now back to the video. Here we have the 4-hour price chart for Amazon.com Incorporated, stock ticker AMZN. As we can see here, the stock has been trading under a fair amount of selling pressure for the last few weeks. Most of this downside activity really started to occur during the July 11 trading session. If we can just kind of remember back here, this was a very significant date in the market as far as I'm concerned. I think that it was sort of a turning point in terms of definitely in terms of the technology space, but really in terms of overall stock market activity, because it did really sort of kind of usher in these declines that we're seeing in many of the Mag 7 stocks. So in particular, we can see that this rejection here really resulted in longer term highs that posted at 201.20, so just above $200 for Amazon. And we have seen a sharp rejection now here lower. So this 201 level is really the main level to be watching going forward. But at the moment, we're quite a ways away from there because we have seen some fairly significant declines that have followed. This is a major rejection lower. And we have started to recover some of these losses. But we still have a fair amount of work to do here on the shorter term timeframes. So currently, if we're looking at potential support levels going forward, the first level that I would point to really comes in at the July 19 low, which posted at 180.11, so just above $180. Here we can see that the stock did manage to find some support near the 200 period exponential moving average. That would be this blue line here. And prices have been able to move higher, but the problem here is currently is the fact that we are running into some resistance at the other parts of the exponential moving average cluster. Specifically, that would be these three colorful lines here. So currently we're running into the 100 period EMA, which is the purple line. And then this is followed by the yellow line, which is the 20 period EMA. And then finally the orange line, which is the 50 period exponential moving average. So currently we're kind of caught inside of this exponential moving average cluster, and that can often be a very difficult area to get out of once you enter into that territory. So it can be a bit of a ping pong type of scenario where you're just kind of moving back and forth between these various price levels. So that does appear to be what's going on currently, but we have managed to see highs near this would be just above 189, 189.38. Was posted during the July 23 trading session. So currently, this would be the level to watch the top side. If we are able to break into the 190s, that would enable us to then sort of break away from this exponential moving average cluster and then allow prices to continue moving higher. However, we are seeing some rejection in here, and it still remains possible that we could still break below and see some more downside retracement. So overall, we're in a bit of an indecisive trading period here. We really do want to see the stock price break out of this area in one direction or another, just so that we can get a bit more clarity about where we're actually headed here. Another place that we can look to make these types of determinations would be the relative strength index reading. So here we can see that we had a prior uptrend in share price momentum which did break, and this would have occurred just at roughly that July 11 trading period. In my view, that was a very important trading day, and I really do think that it kind of set the tone probably for the remainder of this summer. Um, that doesn't necessarily mean that we're going to see downside movements in all of these stocks, but I do think that it's going to start to create scenarios where you see winners and losers, and some of these technology stocks start to outperform others, rather than all of them just trading in kind of uniform territory, where one positive day for Nvidia means that every other technology stock also moves higher. I don't expect to see that for the remainder of the summer. I think we'll be seeing much more of a mixed picture. So currently, this kind of decisive trading day here did result in this upside break, this break in upside trend momentum, and this has really resulted in all these declines here into these lower 180s. So currently, what we're looking at, is a bit of a downside price movement. We are still caught in this moving average cluster, as I said, but overall, we are starting to turn out of what would basically be considered oversold territory. We can kind of zoom in here a bit and try to take a closer look at this relative strength index reading. So down here, the purple line is the relative strength index, and then this downward sloping yellow line would be the exponential moving average of the relative strength index. So as we can see here, we really did fall into oversold territory. We did drop below the 30 mark, and then we did start to roll over, which on its own is a bullish signal. But then in addition to that, what you have here is a moving average crossover in the relative strength index. So essentially what this means is that, we can see here that this purple line is crossing above the yellow line. That is also a bullish signal. So we do have sort of two bullish signals kind of working in combination with one another, and suggesting that we could continue to see upward movement with at least within the relative strength index. So currently, we're looking at RSI levels of this would be just below 44, roughly 43.50. So what that means is that we do have a large amount of room here to the top side to continue extending higher, if we're able to break above here. In my view, what this would really require would be a break above this exponential moving average cluster. And then if we do see that occur, we can see some fairly significant follow through here, because we don't really see any resistance until we see another break above the $200 mark. So remember, the next level of resistance really comes in at 201.20. So we could start to see some selling pressure on an approach of the $200 level, but the true resistance zone is actually slightly above there. So overall, there is still scope for the top side here, but we are in a period of indecision given the way price behavior is currently acting within this exponential moving average cluster. So we will need to continue watching this stock, and it is earnings season for the technology space. So this could be kind of a critical inflection point for the company and for the stock. So here's the current market analysis for Amazon.com Incorporated, stock ticker AMZN.